Hi, everyone. Welcome to today's session, How to Optimize Bankruptcy Claims to Maximize Recoveries. This session has been pre-recorded, but our speakers are available via live chat for any questions you have in real time, so feel free to reach out during the presentation. I'm going to give a few more minutes for those who are still logging in, so please sit tight and then we'll get things going. Hi again, everyone. For those who are just joining us, welcome to our session on how to optimize bankruptcy claims to maximize recoveries. My name is Jessica, and I'll be moderating for the next 45 minutes. Before we begin, I want to cover a few housekeeping items. In your GoToWebinar panel, you will find a copy of our presentation deck and links to some additional resources like our guides on how to optimize proof of claim filing and how to supercharge your bankruptcy team. Make sure to check those out before the session is over. The recording of this session will also be available within a week on our website. Today's presenters are two bankruptcy industry veterans. First, we have Chuck Lundquist. Chuck comes to us with over 15 years of experience in market growth, product line extension, and account management, most recently developing partnerships with loan servicing systems across multiple verticals. He has implemented dozens of clients on LCI products, working closely to improve inefficient processes, reduce risk, increase productivity, and reduce bankruptcy-related costs. Prior to joining LCI, he spent a decade in the travel space, leading the rebranding and then merger of the two largest land-based sightseeing operations in San Francisco. His experience involves negotiating key strategic partnerships with Fortune 500 companies, including Expedia, Merlin Entertainments, and Disney. Next, we have Dipti Patel. Dipti has more than 15 years of experience in execution of business strategy through her various leadership roles held at LCI. She leverages her data analytics, information systems, and management experience to effectively provide technology solutions to clients in the financial industry. In her most recent role, she was responsible for managing and delivering new products to market, program management, and interfacing with key business partners. Thank you so much to both of our speakers. I want to quickly remind everyone that the information provided today is not a legal opinion and should not be relied upon as such. The opinions shared are those of the speakers personally. For today's agenda, we'll start with the current landscape, including bankruptcy statistics and trends, then move on to look at the critical role proofs of claim play in the end-to-end bankruptcy management lifecycle and the ever-critical KPI of total recoveries. We'll then cover the POC filing process from 2 points of view, a pretty typical manual process as compared to streamlined methods. Then you'll hear details about the latest in bankruptcy tools and technologies for optimizing POC processing. Again, while this session was pre-recorded, our presenters are live via chat to answer questions as we go. Now I'll hand it off to Chuck, who will kick things off.
Well, thanks, Jess, and thank you all for joining our webinar today about how to optimize your bankruptcy claims and maximize your recoveries. So to begin with, let's talk about what's been happening in the state of bankruptcy over the last 17 months or so. So as we entered into 2020, we actually have seen or had seen our first, albeit marginal, rise in bankruptcies in over a decade. Experts, including LCI, we forecast another rise in bankruptcies in 2020 with a forecasted range of about 750 to 800,000 filings. But after the quick shuttering of the world economies due to the pandemic, bankruptcy volumes really plummeted. So in our initial forecasts in Q1 2020, after the pandemic started, our expectation was really that there was going to be a significant wave of bankruptcies later in 2020. But ultimately, that wave didn't come due to many of the reduced collections activities, government stimulus measures, and logistical changes in filing bankruptcy during the pandemic. In our 30 plus years of being in business, we've actually facilitated dozens of consumer studies to understand the drivers for filing bankruptcy. The main reason for nearly 65% of all consumer filings includes repossession, foreclosure, and collections tactics due to being overextended. With many of these drivers being essentially non-existent over the past year, it's not surprising that bankruptcies have stayed at record lows. But now that much of the country is reopened and the financial industry is getting back to normal, there's still a shadow of the pandemic playing out. About 2.1 million Americans are still in forbearance plans, and about 1.8 million families are at least 90 days delinquent on their mortgages. With protections expiring at the end of June, bankruptcy should be expected to rise and return to normal levels. But considering that normal levels are at least 30% above where we are today, and with a potential backlog of tens of thousands of cases that were not filed due to the pandemic, you should prepare for what we call the pig in the python scenario, where there's a large spike of bankruptcies following the expiration of the relief measures, and that's followed by normalizations of bankruptcies in 2022 and beyond. And remember, that doesn't consider any legislative changes that were proposed in the Consumer Bankruptcy Reform Act back in December, which may have portions enacted, including the dischargeability of student loan debt in bankruptcy. Well, the impact of COVID-19 has been significant, but while Chapter 7s have rebounded slightly, Chapter 13 bankruptcies remain at low pandemic levels. Although unemployment has an effect on bankruptcy filings, it's typically a delayed effect. People are more likely to file bankruptcy after getting a new job in order to protect their future income, as opposed to filing immediately after becoming unemployed. We'll also see the impact that forbearance and foreclosure moratoriums have had on Chapter 13 bankruptcies. Without the risk of being foreclosed upon, bankruptcy has not been a needed tool for many in the same way that it was in previous years. In fact, the strong housing market actually provided another way to get out of debt by selling homes at a profit without the pressure of the housing market collapse like we saw back in 2008. So historically, we can go back to 2007 to another increase in bankruptcies leading to the Great Recession, which led to 1.59 million filings in 2010. It took about 5 years to normalize and return to pre-crash levels in roughly 2015, where for the next 5 years, bankruptcy remained between about 750,000 and 800,000 until the pandemic. In this visual, we show two different scenarios of bankruptcy volumes in 2021 and 2022. First, bankruptcy volumes remain at pandemic levels. If government stimulus continues to be extended and foreclosure and eviction moratoriums continue, the drivers for bankruptcy will continue to be pushed into the future. This isn't our primary scenario though, and so I won't focus on it. Instead, let's look at a return to pre-pandemic levels in Q4. This could bring in an additional 300,000 bankruptcies in Q4 alone, giving us a 700 to 800,000 bankruptcy filing range for 2021. We'll also see a continued growth in 2022 as more consumers get off pandemic plans and get back to normal. So why is this important? Well, the important time to plan for a flood isn't when it's raining. So let's get ahead of the process and optimize your bankruptcy claim filing process now. Okay, to begin, let's talk about bankruptcy and why proofs of claim are important. At LCI, we really look at bankruptcy as having four key segments: the identification or notification of the bankruptcy, the proof of claim filing, the management of the bankruptcy case, and the disbursement processing. The way we think about the identification of a bankruptcy is ensuring that you are in compliance, reducing costs, and making the pie as big as possible for recoveries. Many creditors rely only on the Bankruptcy Noticing Center to send out notices of Chapter 7 assets. But typically, the Bankruptcy Noticing Center only sends out about 0.5% of notices of assets for Chapter 7 cases, while over time, upwards of 10 to 15% of those cases have assets found, which lead to a recovery opportunity. So it's important to leverage a data vendor who provides you with notices of assets to make your universe as big as possible. Once you know about the bankruptcy, then you need to file a proof of claim. You typically have 70 days to file a POC in order to be eligible for disbursements from a given bankruptcy. So once you know about the bankruptcy, it's important to be efficient in filing that claim. Many businesses file claims internally while others outsource to a vendor, and even others sell their claims. Each has a different benefit. Those that file claims internally have the highest upfront costs, but also get 100% of the recoveries of the bankruptcy. There are specialty bankruptcy vendors like LCI who also service accounts on a contingent basis. The benefit for the business is they have no upfront costs, and the vendor gets paid a fee from the disbursement of the bankruptcy. Finally, others sell their bankruptcies either before or after a claim has been filed. The benefit in working with a bankruptcy-specific debt buyer is that they may actually give back any dismissal accounts back to you to put in your normal collections queue. Well, the costs of managing a bankruptcy aren't just in the notification and claim filing, but also the ongoing management of an account. You'll want to monitor an account for updates in status, especially Chapter 7 cases, like I mentioned, where an asset may have been identified, or if a bankruptcy has been dismissed, because it now becomes eligible to go back into your collections queue. Then the collecting of dozens of checks can be daunting. This disbursement processing is really a time-consuming process. Oftentimes, we even see checks for less than the cost of postage. So maybe even a 25-cent check, we've seen those come through. So each of these steps, they can be optimized, but today we're really going to focus on the proof of claim filing aspect. Well, let's go back to Bankruptcy 101 class. What is a proof of claim? Well, if you're the creditor and you have debts owed to you, you may be eligible for disbursements from a bankruptcy, but you need to file a bankruptcy 410 form. One key differentiator between bankruptcy chapters is that only a fraction of Chapter 7 cases have assets that can be liquidated in order to fund disbursements. So here's a key fact. If you don't file a proof of claim, the money that you would have been owed doesn't just go back to the debtor. Instead, it would get distributed to other creditors. In this example, on the left, this is the total amount due by multiple creditors. You'll see in this pie chart that this is the makeup of all of those different creditors. But in this example now, the medical creditors and utilities didn't file claims, representing actually about 25% of the amount owed. You can bet that the bank and mortgage lenders were pretty happy about this, because now that money and those disbursements from the bankruptcy now get split amongst them rather than going back to the debtor. So filing a proof of claim sounds like a no-brainer, right? Well, yes, with an efficient process. We've done time studies with creditors that found that over a life cycle of a bankruptcy, even the simplest unsecured loan could cost hundreds of dollars to manage, including all the time to file claims, manage objections, and process payments. In addition, unsecured bankruptcies typically only recover 25% of their value over the term of the bankruptcy. So a $1,000 account may recover $250 over 5 years and cost just about the same to manage. In addition, with 50% of Chapter 13s traditionally dismissing, half of your efforts go out the window because the case is no longer active. Another example of a pitfall is not having the right data vendor to identify recovery opportunities. One member of our team recently spoke with an unsecured creditor who believed that they were filing all the claims on their eligible accounts. We performed a scrub for them and found all of the claim eligible accounts that they could have filed on. And in a single year, they only filed 3% of their eligible Chapter 7 asset cases. Had they filed those claims, they would have recovered well over $2 million in a single year. So the question is, are you curious about how many claims you may have missed out on? Now I'll introduce Dipti Patel, a product leader at Verus Financial, who will go over filing claims for a typical process versus a technology-enabled process.
All right. Thank you, Chuck. So let's now talk about a typical process after a bankruptcy is identified and validated. User will have to generate a proof of claim form. These forms are available online and can be edited through a standard PDF editor. A typical claim filer will generate a unique proof of claim manually through a PDF editor, filling out roughly 40 fields with the information from the account on one screen and the 410 form on another. Then they save the form, hoping for no inaccuracies. The next step is to assemble the backup documentation. Oftentimes, a filer will have to find the latest billing statement, open it in a PDF editor, and manually redact all PIIs. As this document is becoming a public record, it is imperative that PII is redacted. Failing to redact PII could lead to warnings, objections, and even fines. Then a filer will determine the court district and log into the individual court district to file the claim. Many experienced users who have credentials in multiple locations track their logins via spreadsheets and try to maintain the different court-specific rules on that same spreadsheet. Although frowned upon, in these scenarios, teams typically share the document to make sure that if a rule change, that all filers are notified of the change to limit objections to the claims. This is the same for mailing a certificate of a service, which is required for roughly about 21 court districts. At that point, the team will monitor the case for new updates, objections, and wait for the checks to arrive. So what does a technology-enabled proof of claim filing mean? Let's look at that. Well, these upgrades the way that a creditor can file their proof of claims, building in new efficiencies, reducing risk, and in many cases, even increasing recovery opportunities. The first step here is making sure that you receive an automated electronic notification. No more paper or emails from the courts. It's time to level up and get precise and actionable notifications that can directly integrate into your servicing system. This will make sure that you know of all of the filing opportunities, especially the hidden ones like Chapter 7 assets. The next step in technology-enabled proofs of claim is to eliminate the manual data entry and instead automate the generation of your 410 forms and then QA all your POCs ahead of filing using workflow tools. Workflow allows you to segment the process into generation, review, and filing to maximize the team's efforts. Some workflow tools even can create custom statements of account with only the core information needed to file a POC, eliminating the need to find billing statements and redact key information. Other workflow tools can also limit who can create the POC and who can approve it prior to submission with the court. Proof of claim workflow tools can also allow you to connect directly into the 94 court districts, eliminating the Excel sheets with court-specific rules, login credentials, and other static court information. Single point integrations that include single sign-on can also provide a single interface into the courts and eliminate the need to log into 94 different websites. Oftentimes, these workflow tools can also integrate in with mailing vendors to automate the mailing of a certificate of service and manage the court-specific rules for you, ensuring a low objection rate for any POCs. Finally, technology-enabled bankruptcy management allows you to manage bankruptcies, especially when you have integrated tools with Pacer-like websites. To summarize, we recommend the following 5 steps to optimize your proof of claim. First, Maximize your recovery opportunities with timely and accurate notifications. Utilize a vendor to eliminate bankruptcy paper, provide actionable data, and most importantly, identify Chapter 7 asset filing opportunities. Next, make sure you prioritize your accounts to be eligible. If you have the most accurate case information, you won't waste time generating POCs on dismissed accounts. But also when using a workflow solution, you'll be able to prioritize based on the account balance. Don't file claims on accounts that are less than the expected recovery. Next, leverage a tool that minimizes duplicative keystrokes, especially in the POC generation. If the same information is used for every single POC, like your creditor name and address, make sure you have a template in your PDF editor or you use a workflow tool to auto-populate the standard fields. A game changer for most bankruptcy teams is the auto-generation of POC documents. Leveraging a tool to automate the generation of documents for a user to review can save upwards of 80% of time as compared to manually generating documents. What would you do with 80% more time? Finally, we recommend eliminating the extra steps in filing the proof of claims. This includes logging into each of the 94 courts and reviewing specific rules to see which jurisdictions require certificates of service or other nuanced rules. Make the decision to use a tool where you can file all of your claims within one single user interface that manages all of the unique court rules. Finally, we always recommend that you file on time. Find a partner with your best interest in mind. This can be done running a proof of concept with a vendor to test their data and systems. But the most important thing is don't wait. There will be an increase in bankruptcy filings, and now is the time to make sure that your process is scalable and that you don't miss out on recovery opportunities. And I'm going to transition this back to Jess, who will wrap up this webinar.
Thank you, Chuck and Dipti. For those who would like to learn more, please check out our available resources. If you are unable to explore these pieces now, they are all housed on our LCI website under the Insights and Events tab. For your convenience, we've also shared the link in the chat box of your GoToWebinar panel. That concludes our session for today. If anyone has questions or comments, please make sure to email us at info@lciinc.com or connect with us on LinkedIn. For those that were unable to join us today, the recording will be available on our website at www.lciinc.com. Again, a big thank you to our speakers and to those of you who joined our session today. Have a great rest of your day.